How you doing, guys? This is Vlad, and today we are doing another video on the power of three concept that I've been sharing with you, and we're going to talk about important PD arrays where the model will form. So without further ado, let's get on with the video. All right, guys, today I've posted um, a short trade that I did during London. And here's the executions with the market structure shift and everything marked. And if you watched the last video and studied the material carefully over the weekend, you know why I marked this specific SMT. Now, as I've mentioned in the last video, when using the sequence that you see on the chart with the clear AMD cycles, so accumulation, manipulation, distribution, you want to have the SMT happening between two separate cycles. In this case here, I'm using two level 2 cycles. And what is a level 2 cycle? So if the whole daily range has three main cycles, I call them parent cycles, okay? Each of them, accumulation, manipulation, distribution. So this large blue box represents the accumulation, the daily accumulation. Each of them has its own three cycles of accumulation, manipulation, and distribution. Okay. And so you can see the daily delivery today. It's actually a very, very bullish day. And you can see how during accumulation, price was staying within relatively narrow range. Okay. We've managed to find a trade here and execute on it. But you can see how as soon as accumulation ends here, around 648, 650, then the daily expansion starts. So what more clear proof you want than this? Look at when the moves are starting. And now we are in distribution and it just keeps going up and up. So it's a trending day. These are not the best days to trade reversals, uh, but that's a story for another day. And I told you before, on a trending day, don't wait for setup during accumulation. You're not gonna get it. It's simply gonna go one direction. Okay, uh, so maybe here, if we see there might have been a setup, uh, and I actually don't see one. So it was not provided to you. The logic that I'm teaching you, it was not there. So if you've managed to catch something here, good for you. The logic that I'm teaching, it's not there. And also we have opened with a very large opening range gap, this huge blue box here that I'm going to remove now. But whenever you see a large opening range gap over 200 points, chances are that it's not gonna get filled. Okay, so let's get back on the trade idea that I had from this morning, and after that we're gonna talk about key PD arrays that you have to have on your chart in order to be able to understand where exactly this thing will form, because SMT, as Michael says, is just a confluence. Okay, SMT is just a confluence, nothing more. So you're not using it blindly, you're using it in combination of time. That's why we want the SMT to occur between two separate cycles, so pay attention now. That's why SMT is a confluence. It has to happen between two separate cycles, so the time element should be there, and also price. So the price element should be there as well. So unless price shows that it's time to shift gears and move in the opposite direction, I'm not gonna trust this SMT. Okay, I'm just not gonna trust it. Even though it looks like a good setup, I'm not gonna trust it. And for example, we had an SMT here also, but that was a fake market structure shift, and we're gonna talk about this and how to avoid it. This one actually looked pretty much textbook, but there is one small little detail that we are going to discuss in just a few minutes after I break down this trade. So pay attention, guys. Now, after we have the setup confirmation here with the SMT and everything, price, and let me remove just a second. I'm gonna remove the level 1 boxes now, because this will allow me to move my chart freely. All right, so after SMT was confirmed, we had a shift in market structure. Here's your breaker. Here's your breaker once we have traded below that candle, okay? Below that candle low. Breaker was actually never touched. This is your classic 2022 model, where price goes to take relative equal highs. And now this is a higher high, but these are still relatively equal highs. Price goes up aggressively with displacement, with speed. Okay, there is a BC being left here, prints a high and then drops once again with speed. These are very important details to pay attention to. It drops with speed, shifts market structure, and that's why I said, by the way, that here this also looked like a textbook, but it wasn't, because we did have a displacement on the way up to take liquidity here, and then also we had a displacement down below this breaker, which eventually turned out to be a rather lousy move here. I mean, it did provide a move, but it was very, very short term. It was just a retracement before the actual liquidity sweep here. Anyway, as soon as we shift market structure, you want to take the first CB that we trade back to, okay? You see me here enter as soon as market structure shift is confirmed, just in case this stays open. That's why I'm placing my first 5 contracts here. Then I've tried here to enter as soon as we went like the candle opened and it went high one tick. I tried to enter. You see I'm entering at the open of this candle, and then I added another contract here as it was going up, but it was a market order, so it didn't really fill me within this CB, but that's all right. And then stop loss initially I've placed above this candle high, but then that's the more conservative way to place your stop loss. The more aggressive way would be to place it above the breaker, and you'll see me in the execution. If you watch the video, it's just 2 minutes, so feel free to watch how I'm managing the trade there. I very quickly moved my stop loss above the breaker because I saw that this is a good setup and price will likely move with speed to my target. And then of course we have here relative equal lows that I was targeting initially, and then ultimately I was targeting the low of the manipulation cycle here. Okay, we traded a little bit further down, created relative equal lows here, didn't take that low, stopped right before it, and then shifted gears, and ever since we keep pumping up on the day. Okay, and remember guys, because this is all this price action, accumulation, manipulation, distribution happens within the accumulation parent cycle, so the daily accumulation. During the daily accumulation, if you're trading the level 2 cycles, because we are in daily accumulation, you cannot expect large range movements. So you have to pick your take profits or your targets very carefully. Okay, you don't want to shoot here because it's unlikely that we will deliver there. Okay, it's unlikely we will deliver there during the same cycle. Okay, maybe in the manipulation cycle we could have shifted market structure and then during distribution go down and take these relative equal lows below midnight open. But because we're taking a setup within the daily accumulation cycle, you cannot expect this liquidity here to be delivered. Okay, I hope that makes sense, because these are important details. It really depends which which part of the day you're trading. It really depends how far your take profit target should be. Okay, so but these are things that will come naturally with experience. I'm just giving you some tips here, depending on time of day, how to position your take profit. All right, so let me show you why this specific market structure shift here was not the real move. Just faded here, gave up the ghost, and went to take this liquidity one more time. There is one, I mean, there are details to this, and as I said, time was at our side, but price was not. So this is 330 here. So 330 is usually the sweet spot many times for reversal during London, but in this case it was a fake move, because even though time agreed and there was an SMT here, that's why I'm saying also once again, SMT is a confluence, it's not the mother of all trades. Okay, it's just a confluence. It increases the probability in your favor, but also time and price are important. Okay, so we had the SMT, but what key PD array we should be looking for when hunting for setups? There are several important PD arrays, and we'll go through them over the next few videos, but the single most important PD array that you have to pay attention to when finding setups, maybe some of you can already guess it, or if you have spent time to study over the weekend enough, you will know it already. This is the new day opening gap and new week opening gap. The single most important PD array that you hunt setups around: new day opening gap, new week opening gap. Okay, so most of your setups, if not all of them, will form within an NDOG or an NWOG. Okay, look at this. We have a new day, a rather large new day opening gap of July 22nd, right where the setup forms. Okay, and this is extremely important, guys, if you want high probability setups and if you want to catch these large moves. This is where it's gonna form, within this PD array. Now, the initial move to the new day opening gap, many times you're gonna have one more push into it. So you're gonna have the 2 cycles between which SMT occurs, both trading into the new day opening gap or a new week opening gap. Okay, so it's like, think of it like a retest of a level. Okay, so if you think in terms of traditional trading concepts, we have first a push into this new day opening up, and then second time is like a retest of this level. Okay, and then it fails again. Once it fails the second time, so see this one here, you can say this one also goes with speed, takes liquidity, and then drops with speed, but it doesn't reach the new day opening gap. Okay, so this is the magnet for price. The new day opening gap is the magnet for price. Remember that. So we want price to trade to it, so it will naturally be attracted to it. Okay, and then once it fails for a second time, then you can be sure with a very high conviction that this is likely to trade lower to take liquidity or feel an inefficiency or whatever. Okay, it's gonna give you enough of a range to catch a good move. All right, so, and I want to go back now on the chart and show you many of these SMT examples that I've shown you in previous video. They happened around new day opening gaps. Okay, so let's see. And now I'm actually going to put back the level 1 boxes so we can see the daily. All right, and I'm gonna go maybe on a 5-minute chart. Okay, so let's see where we are today. Let's reset the chart. Oh my god, this is a lot of... I'm gonna decrease the amount of new day opening gaps and new week opening gaps. I'm not gonna show the regular trading hours ones. Okay, so this is the setup from today, formed within new day opening gap. So moving on to yesterday. Look at this. Yesterday, during manipulation phase, we dropped here aggressively into this new day opening gap. I don't even remember what's that? That is July 30th, if I'm not mistaken. Okay, and let me actually remove new week opening gaps for now as well. So the chart is a little bit cleaner. Okay, so we dropped into this smaller from July 30th. Also here, the SMT, it formed right above this one, which is a larger gap, which was within that same day. So that was the same day gap. So that's August 3rd. Okay. Right above it, we formed this SMT and then dropped during manipulation all the way to the lower new day opening gap, which was within the larger one. Okay, that's from July, whatever, 26th, or what was it, 30th. Anyway, moving back, the day before, between accumulation and manipulation, we have an SMT. Look where manipulation is reaching to. Right at this new day opening gap, which is what? July 23rd. And then drops. And then drops 620 handles. Yeah. It's a wow. It's a massive move. Here, although there is no SMT at the very top, this formed at the top of this new day opening gap as well. Here there was a long setup which I actually took and I have posted on my YouTube and on X. SMT between accumulation and manipulation cycle before we shoot up here. That was before 9:30, so here the low is at 8:40. On the 1 minute there was a fair value gap here during the 8:50 macro which formed, so feel free to drop on the 1 minute chart and check it out. Also forms within a new day opening gap, as you can see these blue boxes here. See that? Yeah, in the upper half, by the way. It's also very, very bullish at the time. Here, short little SMT here, but it was a lousy move. And then price just went up for the day, similar to what we're seeing today, just a trending day. So nothing, no real opportunities to long that. So moving on, here, let's see if we have it on the regular trading hour or something. Yeah, these are better defined, so let's use them. So regular trading hours, new day opening gaps are also important, and many times they will overlap with electronic trading hours, so they might be slightly bigger or slightly smaller. They're also just as important as the other ones. So well, see now this setup here between accumulation and manipulation. We have a new day opening gap, and here above we have a new day opening gap, and the setup forms exactly at, you guessed it, event horizon right here. See that? So that's why these gaps are super important. Okay, there was an SMT here, but in order to see how this formed within a new day opening gap, you have to go back, you have to go way back into price action, and I'm not sure we can actually go so long back here, all the way back to April, May, in order to see it. So let's see if I can find it. The indicator doesn't go so far back, so it's going to be here. So I'm gonna draw the box now from closing of this to opening of this one. Okay, and I'm gonna extend that to the right. Yeah, I think I drew that correctly. So if we go all the way back now, let's see where this setup formed. Yeah, baby. Yeah, baby. I told you there is an NDOG there. exactly there. And there is an SMT between manipulation and distribution cycles. Yes, baby, yes. Look at that. Isn't it exciting to see that? And yeah, with the indicator, you're not going to see that one because you're probably going to plot the last 5, like Michael says, or 10. But he also says, feel free to explore older ones. And because on the daily, let me show you, this price section is very far back. The last 5 are not going to cut it. You have to go all the way back to May 1st. So you can see it. It's this one, this candle. Going into it with the SMT and then shooting up. Okay. Not 5 months, of course. Okay. Yeah, baby. NDOGs are really powerful. Really powerful. And it's not a coincidence that Michael pays so much attention to them in the recent lectures. Here, another setup forming right above, new day, opening gap. Okay, this is a regular trading hours, new day, opening gap. Another setup. So here also an SMT. Let me show you. During London, similar setup to what I've traded today on a 5-minute chart, forms within new day, opening gap. Yes, it's a rather small retracement back into this AVG here and a volume imbalance. But on the 1-minute chart, I'm sure you can find a fairly good setup here. That's a, what is it? It's like a 65-70 points range. You can find a good scalp here. You have all the confluences on your side. And then, of course, the massive here SMT above this new day opening gap before price dropped lower for the day and continued all the way down. All right, so here, if you go back, and of course, guys, I'm not going to show you any more examples, but you can see it. It's clear. It's clear as day. Look where they form. It's always around new day opening gaps. Always, always, always. Here, see that? It's there. Every setup is forming around these gaps. You just have to find the right gap. Okay, and all this piece of price action here that you see, if you go on the daily, that's all these lows in here that you have to go back quite a while in order to find the correct new day opening gaps. Okay, you're gonna have to mark this one also. You're going to have to mark this one also. See? So let's go back on the 5-minute, quickly see if we have more setups forming around them. Here, but there was no SMT, let's say, so not really. Setup here we have an SMT, so this one is an SMT, and of course it's around, see that it's within an NDOG again, and it's 5:15, end of the day macro starting, and then we open all the way up here. So if you hold this overnight, well, you're gonna be the lucky winner, trading all the way back to the other new day opening gap back here, sweeping all these relative equal highs. Okay, so you see how many of them, look, here is another one. Even though you don't have the SMT, but you see how manipulation goes down to this one and then shoots up. So many of them will form this exact same way in here. So let's go back to today's price action. We keep printing higher, higher, and higher. And once again, during manipulation, we have a retracement here. So I hope, guys, you like what you're seeing and you like what you're learning. It's been a long lecture, longer than I expected, but I just wanted to show you plenty of examples and give you a few tips and tricks on how to filter out low probability reversals and trades versus high probability ones. And I hope you are really starting to see the power of these concepts that I'm sharing with you. And I'm not saying, guys, I invented anything. This is just ICT and my read on time and price. So time and price. The sequence is giving you the time of day, and it's telling you when to hunt for setups, and then price is just validating that the right time is indeed arrived. Okay, so I hope you learned something today. In the next video, we're gonna go over some other important PD arrays, which where price reacts from, and which will help you to find setups as well. But these are by far my favorite and by far, I think, the most important ones. Price moves from an inefficiency to an inefficiency. So in order to deliver efficient market, we have to fill these gaps, and price will naturally be attracted to them. And this is just the matrix and the framework that will help you to see how exactly the algorithm will deliver price at which time and in which way in order to fill these gaps. Okay, so nothing more. We're keeping it simple, we're keeping it ICT, and we are keeping it high probability. So if you are new around here and you like my content, please like and subscribe. Help me grow the channel. And of course, guys, until I see you in the next video, it's been my pleasure, and I'm out.